Orton is Chief Market Strategist at Carillon Tower Advisers. He's joining us right now. Matt, great to have you back on the program. Thank you very much. You know, you've been positive emerging markets, especially markets in Latin America, India, China, and you remain constructive. But just to, let's start this conversation with a quick view on what the inflation number out of the US means, and does that change your views in any way? In terms of the Fed's reaction function and in turn what the market will do, stock markets will do around the world. Your sense?
Yeah, good morning. It's great to be back. And I think the data that we got earlier this week on Tuesday was there's no way around it. It's uncomfortably high inflation data. It doesn't, I don't think, change the long-term outlook I have on markets. Overall, I think that the Fed's 75 basis points is what's going to be on the table. Certainly 100 basis points is now possible, but I don't think that's what the Fed's going to do because at the end of the day, we're even moving 75 basis points is still going to put the Federal Reserve at 75 basis points above the long-term neutral rate. So it's already going to be well into restrictive territory. But the lows that we had in June already impound a lot of this worse new situation. So I don't think we need to necessarily go down to the June lows or below the June lows. I think the market is already impounding a ton of really, really negative information. It's fashionable to be bearish is what I'm telling a lot of clients. There's some rooms I'll be in where I'm the only person who might not be a bear on the equity market at this point. Positioning is incredibly bearish as well. Hedge fund positioning in global equities is near multi-decade lows. So from a positioning standpoint, the fact that we haven't breached key technical levels back going down to the June lows, I think that is a little bit more constructive. I think emerging markets as well, going back to your question, Prashant, they have been holding up very, very well relative to the US and relative to global equity markets. And in particular, Latin America and India have done well. And I think it's because Latin America was ahead of the curve with respect to a tightening cycle. So their central banks are almost done tightening rates, if not already done tightening rates. And the economies have held up fairly well. Having some commodity exposure, I think, has helped them. You're seeing strength in industrials and materials in a lot of those economies. Those are parts of the market that I think will hold up well in a slower growth environment, an inflationary environment. So that's what's working. And India in particular is a little bit more insulated, like you were talking about earlier, from some of the global malaise that we're starting to see. The markets are looking for idiosyncratic stories right now, and both of those fit. So when I talk to clients, I tell them to continue to keep a core defensive bias in portfolios. But when the market provides us with opportunity, when you have moves like we did on Tuesday, particularly in the US, use it opportunistically as a long-term investor to pick your positions. Small caps, I think, look attractive from an earnings perspective and a valuation perspective. Emerging markets, Latin America and India in particular, also look attractive to add for global asset allocation. So that view does not change.
Okay, that view does not change. Matt, hi, good morning. And you know, that view has played out in India, right? Especially the domestic stocks in India have done remarkably well. They are in a bull market of their own. The Indian consumption stocks, the automobile stocks. To your mind, you think this is start of a fresh bull market in India, where even when the foreigners didn't buy a lot, the domestic sort of inflows kept the market intact, and now we have seen a return of foreigners as well. So could India be in a bit of a Goldilocks scenario?
India is certainly benefiting from a relatively strong economy at home, and also the fact that there really is not a great place to put your money elsewhere in the world. It's a little bit harder, especially as a local Indian investor, to be looking to the US and saying this is a great place to be relative to what you have at home. So I think that is benefiting the market as well. And earnings have held up. Yes, valuations are expensive, but that in and of itself is not a reason not to own something. It might be a reason to be a little bit reticent to be adding to exposure at these levels. But again, that's why I say we use downside opportunistically. Is if you do get a sell-off in Indian markets, like we've seen around the rest of the world, that's probably an opportunity to put a little bit more money to work, because the longer-term fundamental trends, both from a macro perspective and company-specific perspective, are holding up very well.
But it's already been what, 15% rally that the Indian markets have seen in the last 3 months, right? That's quite a ferocious move on the upside. Do you think the risk reward is still favorable for an Indian investor to pump fresh money now for the near to medium term?
It's not as favorable as it was in a month or 2 months ago. Absolutely not. But on a relative basis, I still think it is. Again, I don't advocate for chasing the markets higher. I think you've got to let the markets come to you. So looking at where we are now, looking at the fact that there's been such a relative gap, especially after the negative CPI news, I think that's a point to wait until you see a little bit of downside in the market. And as a long-term investor, it's still a good time to be putting money to work because there's still a lot of opportunities. I mean, when you look at the emerging market complex as a whole, you've had a decade plus of pretty terrible underperformance relative to the rest of the world, relative to international developed equities, and particularly relative to U.S. equities. So this trend can continue, and especially when you have stronger underlying fundamentals that likely aren't going to be challenged by the Fed rate hiking cycle in the U.S. and backed by a consumer that's willing and able to spend at home, I think that lines up very, very well to use downside to your advantage.
So, you know, tech as a space, Matt, how do you feel about that? You know, IT services here, we don't have tech product companies, at least not very large ones like you got in the US, but essentially that is a space. What are your views?
So I think tech overall has tremendous long-term secular growth trends. I mean, sure, some of the large FANG and mega cap tech names in the US might not exist in India, but from a long-term investment perspective, I think technology, at least so far this year, has lagged to the financials complex or industrials, materials, energy. So I think there can be opportunities in information technology. And when you think about what companies are investing in, information security, that is a key investment that companies are going to be making. So having exposure to anything on the cyber side of the business makes a lot of sense. When you talk to chief technology officers at global institutions, the one area where they are not cutting spending going forward is in information technology and security. So that trend is going to continue. And we're also starting to near a point in the cycle where companies are having to reinvest in their cloud computing, offsite software services. So that's why you're seeing enterprise, at least you're seeing it so far in the US and some other global companies hold up very well. So having exposure to enterprise software, cloud computing is another longer term trend that I think looks really, really attractive long term.
Okay. All right. Just a two-part question before we let you go. What are your top markets now to invest into from 12 to 18-month perspective, one? And two, you know, despite whatever comes out of the Fed, whether it's a 75 basis points rate hike or a 100 basis points rate hike, would that change your market view in any way?
I don't think the size of the hike is going to change my view. If we get a 100 basis point hike with guidance that the terminal rate's going to continue to drift higher, I think that makes me more marginally bearish on U.S. equities. I do. I think that starts to force investors to compress valuations, but that's not my base case. If we get a 75 basis point hike, I'm still optimistic on U.S. equities. Valuations are fairly cheap, especially when you consider in the U.S. How much the world has changed from long-term averages. The U.S. economy has transitioned where information technology and some higher duration pockets of the market make up a much larger percentage of our indices. So comparing valuations today to 10, 20 years ago isn't fully appropriate. I think you've got to adjust for the size of changes in companies and how the economies have changed. So I still think at these levels, and especially if we move lower, U.S. equities do continue to look interesting because profit margins are holding up and earnings have been holding up. The earnings apocalypse hasn't materialized, and I don't think it's going to. Guidance has been adjusted down, and I think it's been adjusted down pretty fairly. So I do like the U.S., but in particular on downside, I really do like adding to emerging markets because from a long-term perspective, you've had such persistent underperformance. And again, the areas to be, we've talked about this a few times in a row, it's still Latin America and India for those long-term, more positive fundamental trends. insulation from some of the other global challenges. And I also don't like throwing China out either, because China's very, very cheap. And as they emerge from some of the COVID lockdowns as a long-term investor, having exposure to some industrials and energy companies in China, I also think makes a lot of sense for a long-term investor.
Okay, we will leave it at that. Thanks a lot, Matt, for joining us. India is well placed from a macro and a company perspective. That's always good to hear. And India has, by and large, been bulletproof in these global challenges. Let's slip into a quick break. Our entire team will be joining us to help us with the list of top 10 stocks in just minutes from now. Stay tuned.